Good morning and welcome back to Almus Market Mornings, your daily dose of global financial updates. There were a host of data both from the Eurozone and the US giving us some hints about the economic health, but attention I believe will be on the USD JPY pair which is trading above the 155 mark. It is significant because this has also triggered a weakness, some sort of weakness in the Chinese Yuan. Remember, these countries are competitors when it comes to exports. Morning, JK, your thoughts on the Asian FX move? Do you think BOJ intervention would be coming soon?
Good morning, Swaraj. Yes, I think focus is more on the currency moves rather than the economic data. Even as yen just sliced through the 155 resistance per dollar, yesterday, even as the Bank of Japan kicked off its two-day rate setting meeting, and now the traders are nervous as to whether Tokyo will intervene while the policy deliberations are still underway. Now, having traded in a tight range over the last 2 days, they've also broken the 155 level for the first time since 1990. And, it was last traded at 155.40 a while back. Now, while the BOJ may keep away from any action till their policy is announced tomorrow, that is likely to contain some hawkish statements, of course. There are some rumors that Japan may upgrade its inflation assessments after the recent wage hikes and weak yen. So, all said and done, Japanese, at least their verbal statements indicate that they are not happy with the weekend, but action will speak louder than words. If they, decide to intervene, coupled with some policy action, that is the only way it can be effective in getting the yen back to more normal levels. Otherwise, the trend is very much likely to continue. Yes, the break of yen level at 155 actually has focused on how the Chinese Central Bank reacts through its daily fixing. Of course, nerve seized after fixing was only slightly higher than yesterday's at 7.1058, just 10 basis points higher. Fear is that yuan will be allowed to fall, competing with the Japanese and move setting stage for another round of Asian currency depreciations. However, Chinese authorities seem to be avoiding a disruptive action as it may evoke a stronger reaction from US. And of course, in the past, we have seen depreciation of yuan has led to unsettling the global markets. In fact, in Asia, the yen moves and the overall dollar strength has led Indonesia, the Indonesian Central Bank to deliver a surprise rate cut yesterday, stepping up efforts to support their currency, which has fallen to 4-year lows on rising risk aversion and also delay in expected timing of any US policy easing. Now, its policy rate stands at 6.25%. This move is definitely a backup effort after their currency intervention failed to arrest the fall of Rupiah. Only 6 out of the 35 respondents to a poll had predicted a rate hike, which actually indicates how much of a surprise this move was. The currency, of course, immediately rose after the move by 0.7%, but if in Asia today, it has moved back to where it was before the decision. Now, apart from rising US yields and inflation, as well as geopolitics, political factors have also weighed on the currency. As for the other currency, which was weakening, Korean won, which is also started to depreciate today after recovering to 1360 levels yesterday, and so the dollar is continuing to have its downward impact on the vulnerable currencies, and focus remains on what happens to yen, particularly after tomorrow's policy meeting. If status quo is maintained, the yen will continue to weaken, and other Asian currencies will definitely follow suit. As for the other currencies, euro has remained quite steady near 1.07, absorbing a lot of selling pressure. By the euro bears. Good data and breakout in euro yen has given the euro good support. German yields also rose after the stronger than expected IFO data and a hawkish comment from Bundesbank official also. Yes, there was some data, the all important business sentiment in Germany improved as per the IFO survey to 89.4, well above economists' expectation. Current situation index also increased. The business sentiment across manufacturing sector has continued to recover. The trade and construction segments also seeing improvement. So nevertheless, there is across the board improvement in the business, environment as far as Germany is concerned. And definitely it is aligned with expectation of an improving macroeconomic environment, although this is unlikely to change the expectation of a rate cut in June, but definitely puts doubts about a move after June. So there can be one single rate cut, but perhaps not more, particularly if the data continues to come on the improving side. US durable goods orders were not so encouraging. The headline number, of course, was impressive 2.6% in March, but the core orders, so stripping out the transportation, and aviation, it was only 0.2% higher. So the manufacturing side of the economy is definitely undergoing some sort of a slowdown. We saw that in the S&P PMI survey also 2 days back, and the business is definitely unlikely to heat up until the inflation falls and Federal Reserve starts cutting rates. We have situation where economic data continues to be somewhat better in Europe, and in US kind of mixed number. Yes, GDP number today expected a 2.5% growth for Q1 of 2024 after the 3.4% that was recorded in the previous quarter. So that will be the focus, and PCE number, of course, tomorrow. So a lot to watch, and everybody is on their toes as far as the currency market is concerned because of the kind of moves that are happening. Amidst all this, rupee remains rock steady, moving in a range of just 4 to 5 paisa yesterday. Yes, there's a good floor below 83.30 as of now, with central bank's efforts to keep it stable. And there were some flows reported, but that was getting well absorbed. Rupee traders are watching out for key ES data tomorrow, developments in yen after it broke 155, particularly how the Chinese yuan will react going forward. Central bank's close vigilant actions have, of course, hindered any speculative moves in the rupee market, and is now purely moving on flows and cues from RBI, moving away from free discovery of the rupee's price. Overall, I think support continuing at 83.30 and gradual move higher along with other currencies is on the cards for as far as the rupee is concerned. Thank you.
Thank you, JK. And the Asian currency market seems to be quite in the limelight. The Japanese yen above 155 for the first time since 1990. An action tomorrow after the Japanese policy would be something markets keenly look out for. Chinese Central Bank continues to fix yuan at a weaker level compared to the dollar, and the Asian currency weakness has triggered the Indonesian Central Bank to hike rates by 25 basis to arrest the fall in the rupiah. Dollar continues to remain strong against the Asian currencies. When it comes to Europe, the business sentiment over there improved, and the US GDP numbers will be something markets look out for today. For rupee, moved in a very narrow range, but there is a strong floor being formed below 83.30. That's it from us today. Thanks for listening. Tune in tomorrow for the latest in the financial markets.